Today we're going to talk about the difference between FHA versus a conventional loan. Majority of first-time homebuyers today are utilizing FHA loans. It's a government loan, so therefore if for whatever reason you default on the loan, the government has to pay the mortgage companies out. The reason behind this is because FHA does not require you to have a great credit score and does not require you to have 20% down. The minimum required is only actually 3.5% down. The great thing about FHA versus conventional is that the same individual borrower will most likely be able to purchase a home at a higher price point compared to the conventional, because FHA allows buyers to actually have a higher debt to income ratio compared to conventional. Most of the times, because FHA rates are also a lot lower than conventional as well, your monthly mortgage payment will most likely be lower versus going conventional. Some downside to FHA as well is that if you are a individual that wants to purchase a condo, know that you are going to be limited because not all condos will go FHA, just due to all the HOAs that are incorporated into the condos. When you are utilizing FHA, you must know that not all homes are gonna qualify for FHA. For example, a seller that just bought a property that's flipping it, if they have not owned it more than 90 days, they cannot accept FHA. With 3.5% down, it's more riskier for a bank. That's where mortgage insurance comes in. Some of the cons to FHA is that you're never going to be able to get rid of MI for the life of the loan. Sometimes when utilizing FHAs, depending on the lenders, a Section 1 clearance will be required. If there's any damages like dry rots and fungus forming on the outside exterior, those repairs do need to be completed before a lender will be able to give you the FHA mortgage to purchase the home. So with FHA, you pretty much can't really buy a home that's a fixer-upper. With conventional, the required down payments for conventional can be as low as 3% all the way up to 5%. There is mortgage insurance on top of your monthly payments for a conventional loan if you put lower than 20% down. But the difference from conventional and FHA regarding mortgage insurance is that with a conventional loan, when your property reaches a 20% equity, that mortgage insurance could actually be erased from your mortgage payment. You just gotta notify your lenders. With conventional, the rates are normally a lot higher than FHA. This could have a huge impact on your monthly payment for the same purchase price. Conventional loan normally has a lower purchasing power compared to FHA just because the debt to income ratio is normally a lot lower compared to FHA. So the same individual that can qualify for a $350,000 home, FHA will most likely only qualify for $300K utilizing conventional. Because conventional is not a government-backed loan, it's less strict on the property condition, meaning that if it is a fixer, as long as you can move in, it's not like a big old hole in the roof or so, you could technically buy the home with a conventional loan and fix it down the road while you're living there. If you don't have a credit score that's at least 680 or above, it doesn't really make sense to go conventional because your payments are going to be so much more higher versus going with FHA due to the mortgage insurance rate and the debt to income ratio and the interest rate. Between FHA and conventional, what is right for you? I don't know. Everybody's situation is going to be unique to them. That's why it's so important that you speak to a local expert in your area to find out exactly what's more preferred for your scenario. Because maybe your credit score isn't the greatest, FHA might be a better route for you. Or maybe you're a single person that just wants to purchase a small condo, then a conventional might be a better route for you because FHA may be limiting on your options due to the restrictions of HOAs. If you are afraid that mortgage insurance is just gonna be like a waste of money, let me give you guys a tip. Because FHA allows a borrower with not the best credit score to get approved for a home loan, maybe what you might want to consider doing is utilizing FHA to buy the home, and then once the home gets to about 20% equity, refinance that home into conventional, so that way you can get rid of your mortgage insurance. This is a great strategy for a lot of individuals that are in a hurry to become a homeowner because they don't want to be forking out money to pay a landlord that they've been renting at for several years. Or maybe you are a great individual that's been super disciplined, have great credit scores, and have a huge amount for down payment. Then go with conventional, so that way you get rid of that mortgage insurance right away. But majority of home buyers today are gonna be utilizing FHA just because it makes more sense for them out of pocket. So that is a strategy I would recommend anybody that is planning on utilizing FHA, so that they can get rid of their mortgage insurance on the long run. And my name is Chia. I'm a realtor here in Sacramento and Elk Grove area. I make content like this every single week. So if this is your first time here, consider subscribing and hitting that bell so that you can be notified when a new video comes up. And I think I am done talking for right now, so I will catch you guys in the next video. Peace out now.